Welcome traders, and glad to have you here. Welcome to followmetrades.com Saturday scanning session. Really glad that you could join me here this morning where I'm at on the west coast of the United States. But I know we got folks calling in from all over the world. So whatever time it is, wherever you are, hey, glad to have you here. And already got people typing in greetings. Hey, Mary. Welcome. Mac, good morning to you. I'm Dean Jenkins, founder of followmetrades.com, and here in just a few minutes, we're going to be scanning for great trades for the upcoming week. I'm going to walk through the method I use, and then we're going to get right into it. We're going to try and find the next great breakout trades. I want to make sure you can, that you're able to ask questions, make comments as we go along. So make sure you can locate the chat function in the Zoom webinar panel and locate that, and then go ahead and type in where you're calling from. It looks like Tim's been here before. He's already doing that, and he's calling in from Houston, Texas. Hey, good morning, Tim. Glad to have you here. JD, good morning. Hey, Bob, good morning. Max calling in from Roanoke, VA. BJ from LA. Los Angeles, not Louisiana. Sarita from San Antonio. We got Los Angeles, Toronto. Rick in South Carolina. Vegas. Rebecca's calling in from Vegas. Virginia. Mooresville, Tennessee. Elton, another LA guy. Robert, good morning. Los Angeles. We don't have any overseas people typing in yet. Typically, I'm sure we've got a few, or people will be logging in. Joe from Florida. Eugene from Edmonton. We got a couple of people from Canada. That's not really overseas, though, right? It's just up there. All right, and it looks like more folks are still logging in, and that is great. Oh, look at that, Andrew from Botswana. Okay, you get the distance award, Andrew. Botswana. Glad to have you here. Glasgow, Eric from Glasgow, Scotland. I knew we'd get a couple overseas folks, at least overseas from where I'm sitting. I'm just about an hour south of Seattle. I'm in Olympia, Washington, here on the west coast of the U.S. And man, we had some rain yesterday. Fall has definitely started here. Chris, Virginia Beach. Oh, no way. It's Nargis from Kuala Lumpur, Malaysia, 8 p.m. So good evening. Well, thanks for staying up late. I hope you walk away here happy that you spent this time. We're going to try and find some really, really great trade ideas. And with the market doing what it's doing, I think we're going to get some. I think there are going to be some great opportunities. Well, let's go ahead and kick this thing off. You know, I say finding great trade candidates can be like finding a needle in a haystack, right? There are thousands of instruments to trade out there, and it can be hard to narrow that down to the absolute best candidates. But we're able, you know, got some tools and some methods to do that. So we're going to be doing that today. I'm going to go ahead and turn the camera off. I wanted to be able to say hello, and a real person here, but let me turn the camera off so that we can see the slides. I'm not in the way there, okay? Hey, before we get started, I just want to give a quick disclaimer here, and that is I'm going to be showing live trades and coming up with ideas that I'll actually be trading. But I'm a trader. I'm not a financial advisor. I'm not giving financial advice. I don't know your individual circumstances, so I share what I'm doing, and each person needs to make their own choices about what's appropriate to trade in your own account. Only you know what's appropriate. So I share what I'm doing. Each person makes their own choices, their own decisions. I'm not giving financial advice. I'm sharing everything I do here for education, information purposes only. So I think that sounds fair, and hopefully you would agree. All right, if you don't know me, I know I've got some new folks maybe who just got invited. Hey, I'm Dean Jenkins. I'm the founder of followmetrades.com. And I've been trading over 20 years, over 25 years now, actually. And I got started when I went to work for Intel Corporation. They gave us incentive stock options, and we had an employee stock purchase program. And I started there in '93. And boy, Intel stock doubled and split for years, like clockwork. And I began to see the real power, that you can make a lot of money in the stock market. And so I got interested, and during that time, that was the run up to the dot-com thing. I began trading other things, and had some wins, had some losses. Didn't have any kind of trading method, but I was certainly hooked into trading. During that time, I went and got my MBA from the University of Washington, and for a long time, I was a fundamental trader. I just, study balance sheets and earning statements, and just go through and do all the stuff that I learned in business school, and it was totally frustrating. I got mixed results from that. And, you'd have a stock that the company just looked great and it'd have great results, and it would go down. Apparently it wasn't good enough, or, something that had kind of weak results, and it would go up, and I guess not as bad as everybody thought. And I said, boy, there's got to be a better way. I totally gave up on the market in 2007 for a while. I just put my money in cash and, sat on the sidelines in frustration. And it was really lucky because I got out before the crash, so I preserved a lot of capital. But I got back in, I just couldn't stay away. I got back in, and I started trading again. I got lucky a couple times. I bought Bank of America at $5. It went to $12. But I was still stressed out, even in a winning trade like that. I didn't know, should I get out? Should I take my profit? Should I, what's going to happen next? And about that time, I started getting interested in technical trading. And I just, well, it looks like there's patterns in the market, and that if you studied it, you could come up with, at least a probability of predicting what's going to happen next. And, I learned technical trading. I made a lot of mistakes. I went down a lot of bunny trails, buying the next greatest indicator and program and stuff. But in 2012, I settled on a current system that I'm using now, and I started getting consistent profits. A key part of that was learning about risk control and how to keep losing trades small and have the winning trades be big in proportion to the losing trades. So started getting consistent profits. And then in 2015, 3 years ago, I launched followmetrades.com. And it really came from, I was trading successfully. I was talking with other traders, and people said, hey, if you're going to take a trade, why don't you let us know ahead of time? Because it looks like you're doing good work there. And so I formed this service, a stock advisory service, where I alert people as I'm taking new trades. And it turned into this Follow Me Trades company. And now I do some training and stuff like that. So that's my story. And I love trading. I love talking to traders and sharing what we're doing here. Here's my record. Starting in 2013, I've been able to get pretty handsome returns. We're not talking about taking $5,000 and turning it into $1 million. That's not realistic. But getting good returns, averaging here, lately, last 3 or 4 years, 25 to 30% returns, and beating the indexes. And this year to date, it's off to a slow start this year, but we're still at 11.5% return and above the S&P 500 and the Dow Jones. So doing good, and it's ticking up here at the end of the year, and I think we're going to close out pretty strong. So that's what we're doing. So a little housekeeping about this session. Please ask questions as we go. We got the chat box there. Just jump in with any question at any time, and I'll be happy to answer it. I'm going to explain the setups that I'm looking for. I'm going to walk through how I scan for trades. I'm going to find some great trade candidates, I think. And then at the very end, I'd be happy to take a look at any trades or symbols you're interested in and offer my analysis of it. And who knows, I just might really, really like some of your ideas. I often get great trades just like that. And yeah, this is being recorded, LL, and I will send an email out with a link to the recording afterwards. So I'll start analyzing your ideas there, Harpreet, at the end of the session. Okay, and so stay with me if you want to get the most out of this, because it's all going to come together at the end. All right. I like the couple comments here about success. I love quotes from smart people, right? Here's Benjamin Disraeli, and he says, hey, the secret to success is to be ready for your opportunity when it comes. And that's why I think doing something like this on Saturday, having the trades ready for the upcoming week, and having, watch list trades, waiting for a final confirmation, a final trigger. I think that's a more successful way, because if you just sit down and go, okay, I think I'll find me a good trade now, you may or may not find it, but having a list of candidates that are ready and having a trading plan together, I think that's how I've been successful. Louis Pasteur says, in the field of observation, chance favors the prepared mind. And again, having a trading plan and having done the pre-work so that when the market opportunities are there, you're ready to act on them. I think these are appropriate comments, and again, it's helped me be successful. Robert says, not seeing anything on the screen other than my name. I think everybody else, hopefully you can see my slides I'm sharing. Please tell me that's working. Will you give me a thumbs up if you can see my slide here with those quotes I just talked about? Sarita says yes, Rebecca yes. Okay, all good, all good. Whew. Glad I didn't fail to hit the right button here on the webinar. Let me get my place back here. Okay. Jeremy says black screen too. There may be something you can maximize there. Dean says he had to log out and back in. For most people, it's working great. Okay, here's some things that I've learned over my trading journey as I've turned the corner to becoming a consistently profitable trader. Is you have to have a plan. I think there's lots of different indicators or lots of different trading systems. Many of them work. I got one that works for me and it's working for my customers. But regardless of your trading plan, you got to have great trade setups, repeatable trade setups, explicit criteria that you're using for a trade. And there has to be a high probability outcome, a great reward to risk ratio. So once you have great trade setups, you have to use risk management. You have to control loss because every trade could fail. And then you have to have a strategy for managing the trade once you put it on. Where are you going to take profit at? Where would you exit the trade at? Where would you add to the trade at? So you have to have a trade management plan. I think if you got these three things and you've tested them, then you're in pretty good shape to becoming a consistently profitable trader. Here's the tools I use. I use Dow theory, very simple version of Dow theory. It's just about how do you know when a trend has been proven, a trend has begun? How do you know when a trend has ended? How do you know when a trend has changed from up to down? There's some simple rules for that. I use Ichimoku Cloud. Ichimoku Cloud, very similar to using two moving average lines, although it's different. And I think it's more accurate, and it predicts a zone rather than an absolute level. And I use Elliott Wave, a very simple, very repeatable version of Elliott Wave. I'm just looking for an impulsive wave or corrective wave or a continuation of a previous trend. Let me show you a trade we're in right now that brings all these tools together and kind of helps explain what I'm looking for. So this is a symbol DWDP. It's Dow DuPont, and we are short this trade right now. I am short this trade with my money, and I published it to my customers, and many of them are still short this trade too. And here's what I'm talking about in terms of using these tools. And let me get my pen out because it'll help draw. Let me go get it back together here. Here we go. And so, I wanted to cover this because as we get into scanning for trades, we go, hey, I like this trade, I don't like this trade. Well, what is it you like? What is it you don't like? What is it you're looking for? I wanted to explain that. So if you notice on Dow DuPont, we had a really big price move, a really big dramatic price move. And it's confirmed, you can see in this oscillator down here, this was the biggest move in the last couple of years. So that's an impulsive move according to Elliott Wave theory. And then after this move, there was a correction, right? It went the opposite direction. And it went to a Fibonacci retracement level. And you can see these Fibonacci retracement levels here a little bit. And then using Dow theory, let me clear this off, right? In this downtrend, we had low, lower high, low, lower high, low, lower high, low. Then the trend changed, high, higher, low, high, higher, low, high, higher, low, right? That's the correction. Then the trend changed again, and we get a low, lower high, new low. That's a simple application of Dow theory, Dow trend theory. Okay, so look, I got an impulsive move, I got a correction, and now there's a continuation of that original trend. And so I just want to participate in that continuation, and I looked for some confirmation, Dow theory, low, lower high, new low. I've got the 200-day simple moving average as this white line. I've got the Ichimoku Cloud as a shaded area. And when price did this low, lower high, new low, and it broke the 200, and it broke the Ichimoku Cloud, and I got negative momentum, that all added up to evidence that this original trend was now continuing. And I used Fibonacci extension lines, that's these lines here, these green lines, to project where would it go to based on the previous moves, based on the previous impulsive move and the correction. What's the projected target zone for the continuation of that trade? And it's between 62.84 and 57.15. So I took that trade short at 67.01. That's this light blue line. And my target was the top end of that zone at 62.63. And you can see we're nearly there. We're about 8 or 9 days into this trade. And we're in nice profit, right? We got in at 67.01. We're currently at 63. So that's a $4 move on a $67 stock. That's 8 or 9% profit, right? So this is a swing trade. And we're going to let this run. This red line is my current stop. So if price were to pull back up to that stop, I would go ahead and close the trade. Now, you know, you don't have to have a stop market order in place. It's simply a level where you said, if it hits that level, I'm going to close that trade. And so, again, we're an 8 or 9% profit, and pretty good. So this is kind of a model trade that I look for. And Nancy, you see a trading range. Yeah, I see a little different. I see a big move, right? From $77 down to 62, and from 62 to 72, a $10 move, and then from 72 down to 63. I see a stock with a clear wave pattern, and that's why I'm trading it. All right, so that's a good example of the kind of trade that I'm looking for. All right, and I'm happy with an 8% move, 8 or 9% move. You know, sometimes we get more. You know, we traded some of the cannabis stocks earlier this year. We traded Cronos, and we caught this move here. We took it long at 7.14. We got out at $12, so that's nearly doubling our money. That was pretty good. But you know, those are home runs. You can't swing for the fence every time, but when you get them, it's pretty good. All right, so let's talk about scanning and an approach to that. When I'm going to go look for trades, like I'm doing right now, I stand back and I want to look at, you know, I want to look for what's a big picture. What is going on? Let me get to the right slide. I want to stand back and go, what's going on in the overall market? And just come on. Sorry, lost my place on the slides here. I think this will be it. There we go. I go, what's going on in the overall big picture that could affect the markets? And so I've listed some things here that, you know, as I think about, you know, I'm watching the market in the news every single day, and said, what should we be concerned with as traders right now? What's the big picture as of today, October 6, 2018? Well, the major indexes put in some recent all-time highs. So, you know, overall still in a bull market, but there's a slight pullback going on right now over the last couple of days. Equity traders are concerned about rising rates, and that's probably the biggest reason for the, you know, there's some individual stock news going on. But overall, you know, the slight pullback that we're seeing in the major indexes is probably attributed to equity traders being concerned about rising interest rates. You know, the 10-year treasury at high, multi-year highs. Also in the big picture, you know, the Brett Kavanaugh confirmation is expected later today. If that breaks down, you know, and I'm not here to make political commentary whether that's a good thing or a bad thing, it's a reality in front of us. So if that breaks down, we should expect some potential volatility early next week in the markets. I think the markets are expecting that to happen. The 2008 midterm elections are coming very soon, November 6th, so a month from now. So we should, you know, be prepared for that, and probably have, you know, focus our trading on shorter term, and you know, there may be specific election volatility plays, but at least with my current trading method, I trade based on the existing news. When there's going to be new information coming in with the elections, I kind of want to stand to the side and let that play out. So bottom line, all that, my trades, I want to be out of them before the elections. We got earnings season coming as well. It kicks off with Alcoa, you know, kind of the bellwether. This is the official start of earnings season. That's happening on the 17th. So we got to pay attention to earnings dates on individual trades. And there's no major planned economic news coming this next week. No, you know, GDP is not being reported. The FOMC is not planning to talk about rate hikes. That happened last week before. We don't have any big planned news. You know, breaking news can happen at any time, but there's no planned news. So I'm going to be looking for short-term trades, probably 3 to 10 days on average, kind of like that Dow DuPont trade I just showed you, which, you know, we're in at 8 or 9 days. We're in 8 or 9% profit. I'm good with that. I'm okay with long trades or short, but there's a bias to the short side because of the current pullback that we're in. And I see the Russell and the Dow and the S&P all currently pulling back just a little bit. And we've seen bigger pullbacks in tech and consumer goods. Metals are very interesting, gold and other precious metals, but I'm still watching those. I don't see a trigger yet. I'd like to see gold futures on a daily chart get above 1215 before I get too excited about gold and metals, and I'll show you that level. Here's the gold futures continuous contract on a daily chart. So, you know, massive sell-off for pretty much all of this year, consolidating down here and trying to break out. So this last move down did not put in a new low, so that's a, you know, low, lower high. Higher low. If we break out of this consolidation at about 1215, I'll be interested in watching very closely for metals, but we're not there. And I won't be in trades during earnings, right? So I'll only take trades if earnings are at least about 2 weeks out, and then I'm going to try and be out of the trade. I will be out of the trade before earnings release, because new information can cause unexpected price moves. Can go your way, that's great, but it can also go against you in a bad way and have a bigger than expected loss, gap through planned exit points, and I just don't want that. Controlling loss is a key for consistently profitable trading. I've learned that the hard way over the years. Okay, so that's the big picture. And given that, I decided that this session, I really want to go focus on the NASDAQ 100. So I think because we've seen these pullbacks in tech, right, there may be some trading opportunities. I have a bias to the short side. So I'm going to start looking and see if I can find some trade candidates in the S&P or in the NASDAQ 100, sorry, NASDAQ 100. So I've loaded in, I'm using TradeStation, and in Radar Screen, I'm able to load a symbol list. So I've got the 100 stocks here of the NASDAQ 100 all loaded. And then I've got some indicators in the Radar Screen here that I've loaded. So I wrote a custom indicator, and what we're looking for here is simply, you know, you saw on my chart, I have the 200-day moving average. I think that's a good indicator of, you know, are we in an uptrend or a downtrend? And when price crosses the 200, it can be indicative of a trend change. I use other tools and indicators to confirm that, but it can be indicative. And I also use Ichimoku Cloud, so I've got that on here. And so what I'm looking at, I'm just going to sort. I've got this special indicator written here. It says how many days since price crossed the 200-day simple moving average. And so I've got it sorted smallest to largest. So something that just crossed the 200-day moving average could have a new trend beginning, right? And it's below. So price is below the 200-day moving average, and it crossed 1 day ago. And now I can also look at the Ichimoku Cloud and say, oh, it's in the cloud, or is it below it or above it? So when I get all these indicators to line up, that's a pretty interesting chart to go look at. So what I'm going to do is just start here with these ones that recently crossed and look at them on a chart and apply the rest of my analysis technique and see if we can get some trade candidates. All right. So let me pull this off. Let me get my chart over. And I've got them linked. So all I got to do, the first one up here was Celgene. So all I got to do is click on the symbol. And we're going to look at Celgene and see. Here it is. It just crossed the 200. Now it's done it a couple times. It went below, went back above, just crossed again. Okay. So is there a trade here on Celgene? Well, maybe. We've got this big impulsive move here. So that's in Elliott wave parlance, a wave 3, right? We don't need to overcomplicate that. I know a lot of people overcomplicate Elliott wave, get frustrated. It's just looking for a big move, right? Look at this. This oscillator is helping us see. It's a huge move from $150 down to about 75, lost over half its value. That's a big move, right? And now, has it changed? Did it change? Well, kind of consolidated. And then, you know, this, yeah, it had a correction, kind of fell short of the desired Fibonacci retracement zone, these blue lines, but momentum changed. So we had an impulsive wave, we had a correction. Now, is it heading down? Joe Higgs says, personal rule, thou shalt not short biotech. Well, it's important to have rules in trading. If that's a rule for you, then you should definitely follow it if that's worked for you. I've shorted it, and when there's a good setup, and we've done really, really well. So we've got this change here from this up move. Now we got a low, lower high, new low. That's compelling. That's compelling. It took out this consolidation here, was a support level. It did go below it. That has my interest. It definitely has my interest. And you know, what would be a target? What would be a target for Celgene? Well, we just use a Fibonacci extension, and we just measure the magnitude of the prior moves, and it says, hey, we got a target down here of 49.41. That's pretty good from 87. Now, that may be the larger term target. It may take a long time to get there. And I said, I'm looking out in the short term, you know, maybe, you know, 3 to 10 days for my trades. So in the short term, it may find a bit of support at these prior lows, maybe here or here. And it may take a little effort to break through and get to that ultimate target. So let's say if it was going to stall here, at least temporarily, at this prior low, 76.63, would that be a compelling trade from 87 down to 76, losing $11 on an $8 stock? And the answer for me, absolutely. That would be a nice little swing trade. If I were to take an entry here, I would have my stop at this prior high right there, and my target would be down here. And you can see an important thing for me in my trading is my reward to risk ratio. So the distance from my entry to my target is this distance. That's my reward, potential reward. I'm going to make about 11 bucks a share if I'm right. The risk is the distance from my entry to my stop. Right? How much am I going to lose if I'm wrong and it goes up and hits the stop? And again, you don't have to use a stop market order. It can be just simply an alert or a mental level where you say, I exit the trade. I know some people have a strong aversion to using actual stop orders. When I say stop, I mean the point that we would exit the trade, regardless of what kind of order you use to execute that. But what I look at here is the ratio of this distance to this distance. And this is about double. So the reward to risk ratio on this trade is about 2 to 1. I like that. And I think the probability of it is very high. So that's probably a trade that I'll be taking early next week if this continues. Now, if price goes back up above here, I'll hold off. If we start continuing down into this, I'll be all over this. So Celgene is a good potential candidate. And look at that, was the first chart we looked at. So that's a pretty good scan so far. I like it. So you guys with me on how I'm going through this? Making sense? All right. Mary says yes. Guillermo says yes. Awesome. Awesome. Okay. Barry, thank you. Okay, so there's a little raise your hand feature if you find it in the Zoom webinar platform. It's next to the chat box. So how many people think you like this Celgene short once I've walked through it? Go ahead and raise your hand. Click the hand raising thing. Oh, we got a good number of them. There they go. The hands are up. Cool. Okay, I'm going to go ahead and lower everybody's hand. Yeah, I like it too. What I see right now, I like it. Now I have to go check, you know, their earnings date. There's a great website. Here's a great website. It's mine. But there's another great website. It's called Earnings Whisper. I found they have the most accurate Now they got their own little indicator thing going on here about earnings whisper and all that. I don't care about any of that. I just want the earnings date, and they have the biggest database, the most accurate database of earnings. And it's October 25th. I said I don't want to take it within 2 weeks, so we're right there. So if we were to take this early next week, we would still be okay on Celgene, but no later. So if it creeps up and it's not ready yet, probably pass on it. If it's down Monday, Tuesday, and we've still got good reward to risk, I'm probably going to land on that one as a short. I like it. So let's go. Let's go down the scan here. Yeah, Dory, we're looking at the Nasdaq 100, and we're biased to the short side right now. Here's the list that I generated. The first one was Celgene, and it looked really good. So let's look now at JB Hunt. I'm not liking this one so much. It has not really, look at this really, really strong support level it's got here, kind of a double bottom thing. It really hasn't put in a low, lower, high, new low. It's hovering at the 200, so I'm not excited about that one. Let's look at Starbucks. It's next on the list. Yeah, Starbucks is actually in an uptrend. It did break the 200, but the current price movement is up, right? Higher, high, higher, low, higher, high, higher, low, higher, high, higher, low. So I'm not interested in taking that long, actually. There's a big resistance area coming up, and there's no way I'm taking it short. MELI is the next one. This is similar to JB Hunt. It really hasn't begun the correction yet. It isn't strongly under the 200. Not excited about that one. And we reject more charts than we accept. That's a reality. I probably got to look at 10 to 15 charts to find a good one. We got lucky the first one looked good. Pepsi was good. Nice correction. Lower high, new low, broke to 200. Kind of late though. It's in the correction zone already. So a little late on Pepsi. Gilead hasn't broken. It's still going up, right? The high, higher, low hasn't broken any support levels, so that's not exciting. Doesn't take long to reject a chart. ADI. Hey, what do we got here? What do we got here on ADI? So definitely looks like a correction has begun. Now what I want to do is project how far would it go down. I got to get enough data on the screen. You can see me playing with the scales here. This trend began back here. This uptrend began actually at the end of 2016. This is nice, right? Here's wave 1, 2. So here's my Fibonacci. I'm measuring all of wave 3, and I'm trying to project where wave 4 would go, and it's between these two blue lines. Fibonacci retracement 38.2 to 61.8. And Nancy says this is the best choice so far. I like it too, Nancy. And what's nice here is the correction is well underway, but there's still some room left in it. Right? This one's well proven. It's in a correction, right? Lower low, lower high, lower low, lower high, lower low, right? Negative momentum. Look how this momentum in this oscillator is growing to the downside. It's under the Ichimoku cloud. It is under the 200-day moving average. And we got a price target here, somewhere in here. And I would be conservative and set it here, right? I would set it here. So we're looking at it potentially getting down to about 82 bucks. That's a $5 move on an $87 stock. That's about 7 or 8%. I'll take that in a week or something like that. So yeah, I think ADI is a candidate as well that we might be trading. Max says Gilead was an example of a whippy stock. Yeah, it's all over the place, right? Look at the way this thing swings. We like stocks that swing, but we want to do it in a reasonably predictive manner. And this thing's just at random all over the place. Let's keep going down the list here. We're going to generate trade candidates. So far we got Celgene and ADI as potential shorts. Maxim. Maxim looks good. Same kind of process as ADI. And I've apparently looked at this before. I got the correction lines on it. There's the move up. You see, I measured to the top here, not this big wick. This is a big anomaly, but the closing price, so of this whole trend, it's in the correction. It's sitting at this prior low. If it can break this low, we might have a good entry. and it would probably go deeper into this correction zone. It actually did break it. So if it continues down Monday, Maxim is a good short candidate as well. And you can see I'm just pulling them off this list that I used to filter down. TXN, Texas Instrument, another one. And it just broke this prior low on Friday. And it's got a target down to here. TXN looks like a really nice short candidate. Mary's asking, do I do options or just sell short? You know, I personally use options. I would go buy put contracts on every one of these that we've looked at. But some of my customers prefer to trade the shares, so I publish the data. I provide the data to do it either way. All the analysis is based on the underlying chart here, and the you know, the entry point, the stop point, the target point, and we manage the trade here on the chart. So it can be traded just by shorting the shares. But I like the capital efficiency, the leverage of using options. So I personally would be trading these with put options. But again, it can be done either way because the same analysis, the same probability, the same reward to risk ratio applies either way. Let me answer a couple of questions. Dean H. is saying, do I wait for close below my line or before entry? Close before your line, before entry. Yeah, on each given stock, you know, like if we go back to Celgene, right? Celgene's ready. I would just check to Monday to make sure it is continuing down. It didn't reverse and head up. If it's going to reverse and head up, we may have to sit there through that thing, you know, wait for the next down move. I don't want to time my capital up. But it has already broken. If we blow this way up, right, I can see it, but, you know, you probably got a smaller screen with the webinar thing, right? Here was the absolute last low, and on Friday, it broke that low. So this was ready. I would have traded that Friday if I'd seen it. As long as it continues down, it's ready to go. The other one, TXN, it broke it too, so it's ready. If it had been, if it had stopped before that prior low, I would wait for it to break. I want to see it take out prior lows. I want to see that trend continue. So I hope that answers your question, Dean H. Marcel, how do I distinguish a stock ready to short from a stock sold index downside? I don't understand the question. Right? It's based on the analysis on the chart is the best I can offer. All right. TXN's got 1022 earnings. Thanks, Joe. So that would, yeah, that may be a little too close for us. And that's definitely something we would check before putting that trade on. So 1022 is probably a little too close. And D, yeah, this is recorded. As long as the technology doesn't fail us, in a few hours I'll have it rendered and send out an email with a link to the recording. And yeah, you can come back and study it. Glad you're finding that helpful. And Nityananda, I hope I said your name right. Yeah, earlier in the session I talked about the overall pattern I'm looking at. It's not ABC. It's not ABC. I'm looking at a very simple version of Elliott wave. And in Texas Instruments, here's the big impulsive move up. We're looking at a correction setting up and we're using Dow theory and a couple indicators to confirm that. Nargis, interesting question. If Celgene hits a big round number of 100, wouldn't it bounce back up? Well, it's under 100 right now. And stocks in particular don't find support or resistance at round numbers. Some futures like oil seems to, but you can just look at the chart and you can see whether a particular instrument did respond to whole numbers or not, and make that analysis. Hey, you're welcome. Oh, Marcel's saying stocks go up and down just because the ETFs are buying or selling them. Well, regardless of whether it's the ETFs buying or selling, or it's institutional traders or retail traders, it's actually the combination of all of them, right? What makes a stock go up and down? It's an auction, right? And the collective market participants move a stock up or down. And we can see what the collective market participants are doing by studying price movement. And that's what we're basing it on here. I'm gonna keep going, see if we can generate a few more. Here's Comcast. Comcast is a little bit volatile. We can see here's the big move, here's the correction, had a gap down, and now it's continuing down. That one is interesting as well. And then Monster. Let's take a look at Monster Beverages. So Monster is interesting. It had a big move up, and it had this correction. This correction was actually too big, and it broke the rules to be a correction. So that was actually a new trend. And so this is the new impulsive move. 2 gaps down, a correction to it, and now continuing down. So Monster looks like a decent short right now with a target down here. That's not as good as some of the other ones, but let's keep, I'd like to generate a good handful. Avgo, Broadcom. We're on a daily chart here. We're on a daily chart. I hope I get your name right. Nityananda. It's a tough one. So Broadcom, big move up, obviously a correction, gap down into the zone. Looks like it's continuing wave 5. It's pulling back. And if it were to reverse here and head up, there might be a nice long on Broadcom. It's at a consolidation. It's sitting right at the 200. I wouldn't take this one yet. This is a tough one right now. Sirius XM. So, big run up, beginning a correction, low, lower high, new low. It's right at the correction zone, Fibonacci 38.2 to 61.8. May have a little more to go. The problem with this one, I would, a legitimate place for your stop would be right above this gap. And so the target is going to be down in, even at the midpoint of the correction zone, the target would be there. This would be an example of one. It looks like it's heading down, but the reward to risk on this isn't good, so I would reject that trade. Warren, does my system work for day trading? The analysis technique I use absolutely works for day trading. I don't currently day trade. I just choose not to spend 6 hours a day sitting in front of a computer. I used to do it, got kind of tired of it. I like the trading longer time frames, holding the trades longer. It's way more relaxed. Can go spend an hour or two analyzing trades, managing trades, talking to traders, and then go do something else the rest of the day. But yeah, it works. But I don't publish day trading signals at all. All right. Any other questions about these charts here? I think we found a good list of potential shorts. We've got 1, 2, 3, 4, 5, 6. Celgene, ADI, Maxim, Texas Instruments. We crossed that out though because of earnings. Comcast and Monster. Those are some pretty good candidates there. And so I'm gonna mute for like 30 seconds, pour some coffee, and see if you have any other questions about what we're doing here. Then I'll start taking some of your symbols to look at. Oh, Warren says, what drawing tool app are you using? This is called Ink2Go. It's a pretty cool little tool. Yeah, it's Ink, number 2, and Go. Miles says, hey, please say 5 again. Well, Miles, you're going to be in the trading room Monday when we take another look. But Celgene, ADI, Maxim, Comcast, Monster. Can we cover a few longs? Absolutely. We got some long ideas here as well. So again, I said I had a bias to the downside. We do have a couple long ideas. This is a swing trade, Alexian. So we got a high, higher low, high. If this pulls back and reverses, there may be a long, but we got to wait that one out. And then Charter Communications. So you saw most of the trades we were looking at today, we were trying to trade this move, the correction. Charter has had a big move up, the correction is finished, and the next move is beginning. So high, higher low, high, higher low, pulled back to the 200. All we got to do is reverse. We got a nice long on Charter, and the longer term target on this one, it's got a nice target zone. It's not a cheap stock. It's currently at 316. The target is above 408. So Charter is a potential long right now. And again, I mentioned at the start, for folks who are here, I'm watching metals very closely. If gold can break out, I think we're going to have a bunch of trades in the precious metal area long. All right. So Al, so go ahead and type in any symbols you guys want to look at. I think we had one from Marcel, yeah. Apple. So Apple, no surprise, has been on a very long uptrend. It's been beautiful, more than doubled. It's pulled back over the last day or two, but it's done that many, many times in that uptrend. There's no indication of Apple correcting yet. We got a low, but it went on to a new high. So as long as we're putting in new highs and not taking out prior lows, uptrend continues. Too late for me to try and join an uptrend this mature. So I would not be trading Apple until a correction presents itself, which it has not done. Al, PNC, and Adobe. So PNC, it had the big impulsive move up. It's still in this correction. It looks like it may be trying to correct and head up again, but it is not. I would want to see it break the 200 and the Ichimoku cloud up here at least 147. If it can get above that, then we might have a pretty good continuation of that original trade beginning, that original trend. Adobe. Adobe's just like Apple. I could take the exact comments. Beautiful trend, more than doubled. It did not put in a new high, so that's what's different about this and Apple. So you can see it's stalled at the prior high right there. There it is, there it is. So if it gets down below the cloud, we might have a correction to this trend starting on Adobe. That'd be a good one to watch. Max says COG has been acting well. Last couple of days, yeah. It looks like it's hitting resistance reversed right at the 200, so we'll want to watch that one. Guillermo, NOA. Remember, I'm analyzing these on a daily chart using my method. Yeah, a total breakout trade. It's amazing. It's beautiful. We actually would have thought this was wave 3 and a correction. And as it broke here, my system would have had us getting long on this if I'd known about it. It wasn't on my radar screen. But as it broke above that high, we had nice, high, higher low, new highs. We would have been interested in trading it there. We could have caught that breakout. And even as it broke here, that would have been interesting as well. Too late to chase it. Unfortunately, it is way too late to chase that thing. Oh, they're coming in now. I'm never going to get them all done. I'll get as many as I can. I'll go really fast. And remember, we reject more charts than we accept. It's hard to find a good trade. It's a needle in a haystack. Lows, a little bit of it's a little whippy and gappy. So not the most orderly chart out there. you know, had a big gap up, put in a high, pulled back. So I would not try to, you know, it may reverse and continue up. It's got this gap to fill. I'm just not interested in lows. Great place to go shop, but not a great chart to try and trade. Archer Daniels, Midland, trying to put in new highs. It's up against this prior high right here. So not take a long into that prior high. If it breaks it, you know, if you're a trend trader and you want to do it, it's not my thing. I think it's a mature trend. It's a little late, so I wouldn't take it. Walmart looked good, and you know, here it was. This was the break, right? Right as wave 5 started, big gap up. You could have participated in that. Right now, looks like wave 5's failing. It's putting in lows, lower highs, lower lows. You may find support here. So you got to see what happens at the 200 before you try and trade Walmart. It's kind of a tough one now. CPB from Terry. Campbell Soup. So Campbell Soup has, the soup has been spilled all over the floor, right? High of 67-ish down to low 30s. But it's trying to break out, isn't it? It's trying to find a bottom and correct up. If it can, it's got a big target, you know, percentage-wise, up above 45. But we want to see a real move. So it tried to break out, and then it failed at the 200, low, lower, high, new low. So the downturn's continuing. I would want to see it break up here solidly above at least 42. And then there's not going to be that much profit left. So it's not a great, it's worth looking at for a minute, but it's not that great. Wow. I'm going to grab one from each person here to kind of make sure everybody gets to have one of their symbols analyzed. So Sarita DPZ, Domino's Pizza. Great chart. Terrible pizza, but great chart. So they look like they could be getting ready to correct. See this low, lower high. If it puts in a new low up here, we could have a correction underway. And what it's doing is, at this last move up, it did not go to a new high. That's what has my attention. But we would want to see price break below this low right here. And if it does, it looks like the correction's getting underway. And it's probably going to blow through the 200. So that could be a good short if we get below 272.91. Eric, Costco. And I'm not going to be able to get to them all. I'm sorry. Great that you're interested. Sorry, Cisco, not Costco. Kind of like Apple. You know, big, huge run up, putting in new highs just because it's pulling back for a few days doesn't mean that is over. So no trade here. Too mature a trend to try and chase. No short opportunity yet. Wow. Marcel, do I have special Ichimoku cloud parameters? Yes, I do. You can see my display looks a little different. And if you have it on there, you're going to see my, you know, where my span A, span B are different. I have proprietary settings, and at the end here in a minute, I'll tell you how you can get to those settings if you're interested. Pizza for Todd. I guess Domino's got you hungry for pizza, which is Papa John's. Papa John's has been beaten up. It looks like it's starting a correction up. High, higher, low, new high. Where could it go? Got a target zone up here between 57 and 68. And it looks like it's ready to go now. That's not too bad. So Papa John's, pretty good. Okay, well, we got about 5 minutes left here. I want to make sure we keep it pretty close to an hour. Looks like folks got their hands raised. If you got another question, go ahead and type it in. I did as many symbols as I possibly could. We found We found some good trade candidates. So let's go ahead and wrap it up. I know a couple people were interested in how you can get the Ichimoku Cloud indicator and all that stuff. So let me, we looked at some live charts. So as we said in the beginning, hey, finding great trade candidates can be like a needle in a haystack. But we found a few good ones today, right? A handful of shorts. Some of the trades you looked at, we pointed out some potential long ideas, and I had a couple as well. So we found some, and that's some good ones that I will be taking in my trading room Monday morning. Remember, regardless of the indicators or analysis you use, I think these things are absolutely essential. You got to have great trade setups with a high probability outcome with a great reward to risk ratio. I showed how I analyze that on a chart. You got to have a method of managing risk, and you got to have a way to manage your trades once you're in them for maximum profit. So let me ask, do you guys believe, do you agree with that, that having these things here, these three things, great trade setups, risk management, trade management, will help you become a consistently profitable trader? Anybody agree with that? Anybody disagree with that? Got a hand up? Yes, yes, absolutely. Good. Okay. How many of you are excited about some of the trades we just looked at? The short trades that I called out, a couple longs. I showed you a trade we're in here on Dow DuPont. It's doing really well. Some of our historical trades. How many of you are interested in the ones coming up here, maybe just a little bit unsure about how to act on those? Maybe you feel like this guy here is like, wow, that was a ton of information. I'm drinking through a fire hose, but it was interesting. Okay, if you are, then I'd like to spend a few minutes going over a special offer where you can participate in what we're doing here, and then what we're just talking about the trades, how you can join me and the rest of the traders in taking these upcoming trades. Right? Remember, finding great trades is hard, but once and it's great we found some, but once you find them, you also need a plan. Right? You got to have a plan for managing the trades, and we do have that. Right? I have a stock pick subscription service. You can see my record here is consistently profitable this year. We're still beating the indexes handily, right? We're on track. It's ticked up lately. We're on a pretty good trajectory here, so it's looking awesome. What is that worth to get to have somebody find good trades and then help manage the trades, right? We're averaging about $1,900 a month on a $50,000 account in returns over time. You get about 10 hours of detailed trade consultation per month, just like this in a smaller setting where we're analyzing trades, answering questions, right? If you were to go buy that on the open market, right, 10 hours of trade consultation, it'd be about $1,200. One-on-one consultation, that's expensive with top trading educators. It's very expensive. Ongoing education, this can add up to thousands of dollars. But I'm going to offer you all these things, great trade setups on a consistent basis, risk management, trade management, up to 10 hours of detailed trade consultation per month, one-on-one consultation, ongoing education. You get all this, and of course, winning trades that I'm taking in my own account as well. It's not going to cost you thousands of dollars, right? The list price for my service is $127 a month for my stock pick service. It's about $1,500 a year. It's great value at that price. People are getting good returns on it. But I'm going to offer it to you today. You can try it for 30 days for $37. And then it would be $97 a month, 25% discount on an ongoing basis after the first 30 days. So that's a 25% discount. And I got the link for you right here. And I will put it in the chat box right now. So there's a link. So you can try my stock and option picks and live trading room for 30 days, $37, 100% money back guarantee. If you come try it and it's not a good fit for you, you just send me an email, give us a call, you get that contact information, and no hard feelings, no questions asked. We'll refund your money and cancel your account. And but most people like it and you want to stay. So here's everything you get with the service. You get a watch list of potential trades that I found, like today. You get alerts, an email and text message if you want when I'm getting into a new trade. You get the exact details of the trade, the entry, the stop, the target. Most of the trades can be traded either with shares or with option contracts that provide both. It's your choice how you do it. You get alerts when I make a change, move a stop, take profit, close a trade. You get access to the live trading room. It's an hour now, not an hour and a half. Right at the market open. You can attend if you like. It's not required. There's a recording available and then a 2-minute recap of what we did in the room. And those are recorded and posted on the website. You get a weekly live chat session where you come ask questions. We review the trades Wednesdays, 6 p.m. Pacific. You get a one-on-one consultation with me. When you sign up, you get a link and you can put it on my calendar, and we would be happy to talk and answer any questions, get you off to a great start. And you get risk management and option trading tools and training when you sign up. There's a website and there's a bunch of training material there so you can follow the risk management, and I give a bunch of details about how to trade options with the method I'm using, and ongoing training and support. Right? I'm here for you to answer questions, and of course we're looking for new trades every week and managing them. And there's more. But wait, there's more. For this session, oh look, there's a nice comment from Al. Al says he's new and that Dean's very good at this, honest person. Thank you very much. Thank you. And Miles jumping in. Guillermo, hey, thanks guys. Those are very nice testimonials there. I didn't even ask, but you guys are awesome. I really appreciate that. So there's more. So it's $37 for a 30-day trial. If you sign up during this session, before I hang up, if you sign up before I hang up, I'll include my Ichimoku Cloud training course that explains exactly how I use it, and it includes my proprietary settings, got a written study guide, a training video, printable trade setup cheat sheet. The price on that on my website is $247. You can get it today for free if you sign up for the 30-day trial of my stock and option picks. So I'd really like to have you come try it out, experience the picks, come check, come sit in on the trading room and participate in these trades. So today, during this session only, if you sign up, you will get the Ichimoku Cloud course for free. And like I said, it's on my website. And if you don't get it now, you can go buy it later. But it's listed here in my products. It's the Ichimoku Cloud, and the list price on that is $249. Oops, typo, $249, right? And it's a great value. You sign up today, you'll get that for free in addition to the 30-day trial. Well, Al says, wow, I didn't get that deal. Yeah, I just started offering that. So there you go. Any questions? I'd be happy to field them. We got a great list of trades here. This is recorded, and I will send out a recording. But we're done with the material. We found great trades. I got through it. And I'll just hang out here. And if you got any questions, I'm here to answer it. Otherwise, I'm going to go ahead and stop the recording now.